All right, chat. All right. Shit. Let me have it up. So boom, week five trade recap after last week's crazy bust down. Now we've created a more, what's the word for it? A better system. So let's hop straight into this recap. And no words further to say other than big improvement from last week. So yeah, trying to continue and do the my thing, but they. So I think we took three trades this week. Um, hop straight into it. Entry 9-22, so September 22nd, Monday 2025. Our daily bias was ES and NAS has the same setup. Either we go for London lows on one, then aim for previous session highs, or continue back up to all time highs, chat. Okay. Before trade, we had a confidence level 8. Didn't really trust myself as the week starts up. More on becoming an observer and following my rules. During the trade 9, no trade was taken, but seen a great forward testing opportunity to understand my model better. After the trade was a 10, and the model played out, I would have broke even because I set my break even at a bad stop. Since the trade went along with my bias, break even should have been at the end of the accumulation and towards previous session highs. So here, what was the risk? 1 RR. Did you follow your trading plan? Yes. I didn't take a trade today because I wasn't comfortable with taking one that day, especially after the rough patch last week. How I feel during the trade day, I felt iffy on whether I would have been a good trade, but it was, and I'm slowly understanding my model. Did your strategy play out? Yes, I followed my rules and my plan for the day and preserved capital technically. Technically, Monday, yes, we blew our sixth eval. Alpha Futures charged my Cash App for the monthly eval fine. I didn't have the money in there. So I was like, you know what? Fuck it. I just let the account go away just because it's like, bro, I'm not paying that monthly for the eval when I could just get a new one and be back at 50. You feel me? Since we were down because of last week. But technically, I'm a break even trader because over the past month, I've consistently had the same eval, which is crazy. I did not think niggas had it for that long. But hey, obviously the statistics show. So, boom, this was a trade. Yeah, I definitely would have put the break even at the end of the accumulation and target previous session highs here. Especially since our trend was bullish, along with this being a great PDI right here, inversion right here. So, you know, we didn't take that trade, but obviously this was like a forward testing moment. This was like, okay, that's what I would do next time. So, what was the story on why you took this trade? Market opened with a lot of volume. I saw an accumulation zone right here started to form, and we claimed all the sell side liquidity with a manipulation leg. Right here, we created a clean V shape inversion. Right here, V shape on the 1 minute time frame. And then I set my break even at the beginning of the manipulation leg. This was a forward test, no real funds used. This was not a good break even place, just to let you guys know, because we would have hit right here and dropped back down. So, where was I just at? If it goes along with my bias, put at the end of the accumulation and ride it till it hits your liquidity target right here. Win or lose, win. We preserve capital overall. Didn't trade today just because I wasn't in the right mental state. So obviously, that tells you exactly why I didn't take a trade that day. Just didn't really feel like I should have took a trade, especially after what happened last week. What can you take from this trade? Continue to stick to my rules and understand why am I taking this trade? What signifies to me that this trade will work, and go deeper into analysis behind the trade instead of just because there was an AMD. And that's what I mean by we're starting to understand our model, because I'm pretty sure this tapped a um like I'm pretty sure this tapped some sort of gap here that I didn't mark out, but also I'm starting to understand that I should mark out my charts better so that they look Like they're more easily clarifiable in the journal. And we'll see that as Friday comes along. So entry Tuesday, September 23rd, 2025. My daily bias is definitely bullish. Uh, Relatively equal highs and previous day high and London session on Nasdaq, as we have a lot of volume on the 1 hour and 4 hour time frames respecting bullish PD arrays. And I want to see us either clear all-time highs on both or create a bearish SMT and rebalance the equilibrium of this range right here on both. So confidence level 8. I was ready for the market today. Didn't let any emotions get to me, even though greed flooded my mind. I didn't allow it. I'm realizing I should risk heavier on these evals. I say that just because, like I said, technically it was a break even trader moment just because of how long I was able to sustain an eval instead of actually passing it into a funded and being able to sustain a funded. So confidence level was a 9, entered off a valid PDI and expected price to go higher with the volume it showcased. 8, we followed our rules. As much as I want to trade again, I will not because I know it'll be off of emotions. What was my risk? It was a 1% risk management. And did you follow your trading plan? Yes, I followed my rules and my model. How do you feel during the trading day? I'm getting more confident in the market. I do notice my lack of market experience, but I try to let it not hold me back. Did your strategy play out? No, after the news, the market lacked as much volume. Here we go. So what's this picture? Okay, this was the right one because it was a 3 minute inversion. All right, so boom, right here, right here, man, right here, man. So here was a trade. This was the 1 minute time frame. Lack of volume after the news hit. 9 a.m. news hit and the volume was shitty. Chat like we took out data highs and was just chopping. I got caught in the chop chat, so we didn't take this accumulation zone. I always put break even just in case I wanted to go higher, but this is really just like the take profit area. Um, so this is the 3 minute inversion. We accumulated right here on the 1 minute, as you can see, trend line liquidity. We swept it all out and created a 3 minute inversion after all of this chop. So what was the story on why you took this trade? We were at the equilibrium of the 1 hour for value gap on a bullish trend upwards, which was, as you seen from yesterday, or not yesterday, as we've seen, we dropped down in this 1 hour gap right here. We are at equilibrium of this range. So chop down, and then on a bullish trend upwards. I seen as well after all the morning news played out, we respected a 4 hour and 1 hour for value gap and formed an accumulation zone within the discount of the equilibrium inside of two high time frame major bullish PD arrays. So we're stacking confluence on top of each other to signify that our trade wants to go the way that we want it to go. Um, NAS has obvious draws on liquidity, all-time highs, and relatively equal highs at London highs. So NAS created manipulation leg down, and the highest time frame inversion was a 3 minute fair value gap. We inversed a 3 minute fair value gap, and I placed my stop under the manipulation leg. But sadly, I got caught in the chop, and it stopped me out. It was a winning day because I stuck to my rules, and I wasn't afraid to take my model when I seen it. I waited till after all the news, as well as looked for higher time frame PD arrays for confirmation in my model. What can we take from this trade? Oftentimes, when the market lacks volume, the PDI trading model fails to prevail. And what that essentially means is when there's no volume in the market for us to want to shoot past the accumulation zone or for us to even claim sell side or buy side liquidity, oftentimes the market will just chop in the PDI or pre distribution inversion model. The AMD model will fail to distribute. Sorry, speaking a little too fast. But the AMD model, the accumulation, then the manipulation leg down, usually there's a distribution after an inversion. But when the market lacks volume and it gets too choppy, the model fails to prevail and we don't distribute. So, yes, Tuesday was a winning day, but we lost capital. And that was only because we're starting to understand that when the market lacks volume, oftentimes we don't trade higher or lower in whatever case your bias is. Wednesday, September 24th, 2025. Today, my bias is bearish. We finally strayed away from all-time highs and we're respecting bearish PD arrays on the higher and lower time frames. London, Asian, and previous day lows are relatively close on ES and NASDAQ and are yet to be claimed. Closest draw to the upside on both is previous day New York pre-session PM session close. I want to see the market either first go up and claim this session high on either index to create a SMT towards the downtrend or continue down and show us a PDI towards these strong lows since we're inside a bearish 1 hour and 4 hour gap already, which means it would be some sort of continuation PDI model. As you can see right here, this is NASDAQ PM session high right here, all the way up here. Unlikely we'll hit this, and we're trending downwards towards London lows, Asian lows, and previous day lows. Same thing on ES. We did a lot of this accumulation before the market even opens for the day, to the points where it's showing that we want to reverse back down, especially respecting this gap on multiple occasions. Confidence level was a 9. I didn't hesitate, not as nervous, and it's more of a frustration because when I do the model correctly, it seems to disappoint. 8. Realize that the PDI disrespected a 5-minute bearish for a value gap, signifying a reversal, which was a human error on my part. So even though before the trade I said it seems to disappoint during the trade, I also created a human error that caused this trade to be invalid from the start. After the trade, 10. Follow my rules. Couldn't really do much after the trade was placed. I'm glad I'm at least learning more about the model. My risk was $400, which is around 0.9%. Yeah, 0. Chat. Motherfucker, that be no y'all come back. It's 0.8%. So, yeah. Did you follow your trading plan? Yes, I stuck to all my rules and I didn't stray away from them. How do I feel about this trading day? I realized a little late that the 5-minute bearish fair value gap was inverse and I entered into a clean 1-minute PDI, but I got chopped out essentially because the trade was invalid after that didn't happen. And this is when I said, when you fail to mark up the charts correctly, is when your model seems to not play out or when you get caught up looking for an entry point and other confluence is already disrespect where your entry is. Did it play out? Iffy. Maybe I took a bad setup since the 5 minute for value gap was inversed. So here we go. This is where the 5 minute for value gap was inversed. I think it was somewhere around this range. Oh yeah, I took a picture. So as we obviously see, trend line liquidity all right here. Yeah, obviously want to continue lower. Manipulation leg up after all this, and we inversed on the 1 minute so clean right here. Then we just failed to execute because higher time frame PD arrays disrespected this 5 minute bullish gap right here, signifying a reversal in the trend to continue upwards. What was the story on why you took this trade? My bias for the day was shorts. We displaced with a lot of volume towards market London and Asian session lows, taking them out with ease. The last low for ES and NASDAQ was previous day lows, as we stated earlier. Both of them cleared these two with massive volume. So previous day low was left, and obviously that's a higher draw than London and Asian session. So we accumulated around Asian session lows and manipulated upwards into a 5 minute bearish fair value gap. Since I didn't mark out the chart correctly, what the hell? Didn't mark out the chart correctly. I thought we respected this 5 minute fair value gap to show that we wanted to continue downtrend. Inverted the 1 minute fair value gap on the manipulation leg up, and I enter with my stop at the body of the lowest point in the manipulation leg. So right here, or highest in this case. And then I had my TP at previous day lows as well as break even point at the end of the accumulation. So this setup for the trade was nice. Like break even right here. If we would have respected that 5 minute, we would have dropped towards previous day lows, especially since we had relatively equal lows right here once this was created on NASDAQ and ES failed to claim previous day lows already, signifying that we wanted to tap it later. Now, obviously the trade didn't work because we failed to look at our trades right. We failed to understand and chop and mark up the charts correctly. So, no news Wednesday, trading score, bias alignment, wanted shorts, took one, clear PDI plus. Like that's a check mark. time frame alignment, open, high, low, close of the 1 hour slash 4 hour after 9 a.m. macro. High time frame alignment was a marked down. We manipulated into a 5 minute fair value gap, but inverted it. Market volume plus was too choppy on open when turned into agent session afterwards. Clear liquidity draws previous day low were right at the end of the accumulation in terms of grading a B minus. Win or lose winning day, I stuck to my rules, traded my model, but the market slowed down and chopped me out. What can you take from this trade? Following my rules, my psychology is good, but when I stray away, I start to malfunction. So essentially, this means start to understand that when you follow your rules, when you're controlling everything that you can control, it's hard not to win. So, Thursday, September 9th, 2025. What the fuck is that? I'm thinking too hard. Why would really, nigga? All right. Thursday, September 25th, 2025. Daily bias bears. We're respecting high time frame bears PD arrays. We want to see the market hit data highs, then inverse a 4 hour gap to continue the trend. Or inverse the gap. Wait for 9 a.m. open and take out data highs for an open high low close at the 4 hour. It's like this, we're trending downwards, data highs. I expected us to take out data highs or take out the 4 hour gap and head for data highs, or take out data highs and head for the 4 hour gap. Boom, same thing on ES, no gap though. So confidence level 8. I was confident in my ability to spot a play. Sadly, I missed an opportunity because I didn't mark out my charts correctly. Like I said, we're starting to realize that, okay, I need to make the charts more visible for me and more optimal so that when I'm seeing something play out, I know it's playing out. So what was my risk? Not applicable because we didn't trade. Did you follow your trading plan? Yes. Since both my draws were taken out, I left the market for the day and I didn't take a trade, sticking to my rules. How do you feel during the trading day? I'm pretty bummed that I missed an A plus setup, but I understand that there will be another day to trade. I'm glad that my strat and model played out. Did your strategy play out? Yes, my model and strategy played out. Pick up trade. What was the story on why you took the trade? Even though we were in a bearish trend, we were overdue for a retracement on the higher time frame, and we respected a 4 hour gap. Oof, beautiful. This would have been the trade right here, chat. Like I'm telling you, beautiful trade. Now, once respecting that high time frame for, I mean, 4 hour fair value gap, we retraced and accumulated into a zone. I saw a 3 minute bullish FVG get respected and a 2 minute PDI inversion play. I would have set my stop at the end of the 3 minute because if it got disrespected, I wouldn't want to be in the trade anymore. Break even would have been at the end of the accumulation, which was a 1 to 1, and then um accumulation wick right here. And then targeting data highs because it was my second strong draw on liquidity for the day. Obviously, as seen, I did not catch this one because I targeted a different 4 hour for a guy that got disrespected because of my lack of market experience. So, for example, on the 1 minute, this would have been better viable to show, but this was a lot of accumulation. And then we stayed inside this 3 minute, respected it, inverse this 2 minute gap right here, and displaced strongly with time frame alignment towards our data highs. A plus setup. We disrespected this 4 hour gap I was looking at, but we respected this one that was tapped on multiple occasions. I should have looked for a 4 hour for value gap that has been respected on multiple occasions. This one right here. Win or loss win, we stuck to our strategy, and once I saw the market claim both my draws on liquidity with another optimal entry, I didn't take a trade for the day. What can you take from this trade? Obviously, I lack market experience, but when evaluating FVGs, consider all the FVGs that have been respected on multiple occasions before the current one, if any. As far as I know what an A plus setup looks like, as far as I know what an A plus setup looks like, I'm starting to understand that I know my strategy. Now it's my psychology that needs attention. So yeah, what I can say for that day is yeah, just like a common trend this week has been making the charts easy to read. And I think once you can understand that, your strategy becomes a lot more applicable just because you're able to see on all time frames what you're looking for. So if a 3 minute gets respected while I'm still looking at the 1 or 2 minute, I will understand that okay, I can enter this trade. Because, for example, right here, this 2 minute was disrespected. So I'm thinking, oh, no, we don't want to trade. We're going to continue downwards. But because I failed to mark out that a 3 minute fair value gap was respected for a retest and a retracement, we wanted to continue upwards. So next time we're understanding to mark out the charts better. So Friday rolls around, September 26, 2025. My bias is very bearish from the day. High time frame 1 hour and 4 hours are being respected in the bearish gap sense on both Nasdaq and ES, as well as we claimed prior session liquidity on both. On ES, we left equal lows. My main target for the day is data lows and equal lows right here. ES, pretty low internal liquidity right here. Um, so I'm pretty sure this is like Asian session. Then this is equal lows with London session on Nasdaq as we already claimed Asian session lows or something. Yeah, yeah, Chad, that's about it. Okay, okay. I want to see the market form, PI claiming pre-market liquidity and then trading towards data lows and maybe the EQ lows slash internal liquidity. Confidence level 9. Didn't hesitate to take a trade immediately. I'm very confident in my execution. During the trade, confidence level 9. Trade happened in less than 6 seconds, chat. I didn't really know how to feel, but it was definitely a rush of emotions. And after the trade, it was a 10. It was an A plus setup. We had confluences stacking all on top of each other, signifying the trade would work. And I'm confident in my execution. So, like, when looking to find out what an A plus setup is, what an A plus setup looks like to you, look for multiple confluences that respects where you want to see market go. So if on multiple occasions you're looking for the market to do this or that, and it respects it time and time again, obviously the market wants to follow the trend that you're trying to signify or that you think it wants to follow. So risk was a 0.9%. Did I follow my trading plan? Yes, I waited for the market to show a setup and took the trade. I followed my plan, my risk, and my model. How do you feel during the trading day? Today, I'm really tired from work, but I also was focused on finding an A plus setup, especially after data lows were taking. I wanted the market to present a trade that was guaranteed. Did your strategy play out? Yes, the PDI inversion played out because of the environmental factors. And what I mean by that is multiple confluences signifying that we wanted to take that trade. So here's the trade on the S&P 500, and let's break it down. So once data lows were taken out, the market immediately retraced into a 4-hour bearish for value gap. So couldn't really signify this on this because it was 2 15 minutes, but this huge bearish for value gap. ES also created a high time frame bearish SMT inside the bearish for value gap from the 738 high. So at 738, we created a high on Nasdaq. So this is the 738 high and the 738 high on ES. We took it on ES, but didn't on Nasdaq. So we created a high time frame SMT. We accumulated and created a low time frame trendline liquidity right here slash low resistance liquidity. Our PDI was shown when we manipulated back into the 4-hour, created a clean 1 minute inversion right here. Clean 1 minute V-shaped inversion. So I entered with my stop at the top of the body high because if we continue higher, we would have disrespected the 4-hour and I wouldn't want to be in the trade anymore. My TP was placed at the 5 minute bullish fair value gap that was optimal for a retracement if we wanted to continue our trend upwards. So right here, which was at the end of the accumulation zone, which was beautiful, stacked on top of each other. TP liquidity draws on top of each other as well. And then okay, like I said, which was stacked at the bottom of the accumulation, creating a strong internal draw of liquidity, as well as time frame alignment. If we wanted to respect that 4-hour fair value gap, the candle closure would happen at 9 a.m., meaning we would want to trade lower before that time hits, and it's currently 8:46. As we see, we accumulated upwards, manipulation leg into the 4-hour fair value gap, retraced, not disrespecting it, high time frame bearish SMT on top of that. And I believe so, but we were also inside of a 5 minute bearish FVG, unless that was on NASDAQ, if I'm correct. Two 1 minute candlesticks, like, okay. This is the fair value gap. One candlestick inverted. We hopped in right here, dropped. Quick 1 to 2, just like that, in less than 5 seconds. Win or lose win by following my rules. I stuck to my trading plan and waited for the market to present a setup that was A minus and higher. I didn't FOMO and I stuck to my risk management. What can I take from this trade? I'm starting to understand what a high quality setup looks like. Aligning PD arrays and time frames as well as following your rules makes trading easier because you stop succumbing to psychological problems. Then the only thing you have to control is your setups and strategy. And that was the week. I'm gonna go to it, but first two trades, as you can see, we lost with 1% risk. So that means we probably lost around $1,000 on a 50K eval. And then the last trade we risked 0.9%, which I think is actually 0.9%. So it was like $450 and we got a 1 or 2 for a $900 comeback. So now we're only down $100 on the week. So you can find continue to be in that break even trend, but understanding that we need to risk more. So, what was a common issue this week? Um, Obviously, this week's common issue was making the chart more. What was the word I want to use? Making the chart, making the chart easier to read when setting up. I.E. Trade I could took Thursday the 5th if charted the market to respect my trade. So what I mean by this is obviously on Thursday when we missed this trade just because I failed to mark up this 3 minute inversion on time because I was looking more at the 2 minute at the same time. I missed out on this trade since I chose not to market to chart the market correctly. And that's an obvious problem we've seen multiple occasions throughout this week, so that's something we want to fix. Um, we're already working towards this since we are breaking down why we took every trade this week as well as I could start marking everything that confirmed my trade. So how can we fix this? We're already working towards this since we are breaking down why every trade worked this week, and this is what I mean by what was the story on why I took every trade, and then breaking that down and also marking it out so it's easier to read and I'm able to execute when I see it play out. What worked throughout the week when trading? I can't stress this enough, and even though this shows like this has been said multiple times, but honestly, chat, following my rules, and I like to say, and stacking confluences that confirm the trade. So, following my rules and stacking confluences that confirm the off anytime. Okay. Following my rules and stacking confluences that confirm the trade. So, like, what I mean by this is on Friday, The reason why this was such a good setup was because multiple things were signifying that the market wanted to tap back into this liquidity draw. So, looking for A plus setups. Okay. So why do I think this work? Because the market is literally signifying where it wants to go on multiple occasions. So like for example, respecting this bearish fair value gap, respecting this bearish SMT, signifying it wants to go down. Inversion gap on a lower time frame, as well as liquidity draws stacked on top of each other. So low resistance liquidity, 5 minute untapped fair value gap, respecting the bearish trend. So that's why that trade obviously worked. And as we can see, we tapped it and immediately inversed, which shows yes, the market wanted to go down, maybe not completely, but in that moment, the market was signifying, okay, we want to reverse. How often did I stick to my rules? 5 out of 5 of the days. Great improvement from last last week's 1 out of 5 days. Last week was tragic. Last week was indeed tragic, chat. What was the common emotion I felt? Fulfillment. So like maybe like the fuck. Fulfillment. Following my rules, respecting my habits as a trader. So fulfillment. Respecting my habits as a trader brought emotions I would have never thought I would have felt. Bringing an overall deeper sense of belief into my ability of making this possible. So like into my ability of actually becoming a full-time day trader, to actually be living off of my own high income skill where I took the time to master my craft and continuously day after day repeated the same task to become better overall. Yes, I did feel confident in my strategy as well as I'm starting to understand what a high quality setup looks like. What can we improve on this coming week? Continuing to go deeper into why I'm taking trades and making this visible on the chart pictures. There we go. If we can make this more visible on the chart pictures, this will allow me to basically see it in the moment as well. So like if I'm thinking about okay, how would this look on my trade journal? Like for example, this one right here, marked out the 4 hour, marked out the SMT, low resistance liquidity, 5 minute gap. Like this is literally signifying that okay, like if I didn't have this down there, I could tell you exactly why I took this trade. So boom. Something like that. That's how we can improve over next week, as well as continuing to go deeper into why I'm taking the trade. So going more in depth on the story, going more in depth on behind my mindset on why I would place my TP there, when my stop loss would be there. Like notice this week I said, okay, my stop loss there because I wouldn't want to be in the trade anymore. Okay, so why wouldn't I want to be in the trade anymore? or why do I think my TP should be here because why is this a strong drawing liquidity? So um so explaining more in depth on why I set my TP and my stop loss and overall what am I looking at when it comes to the chart. So like what is essentially signifying where the market wants to go. What is telling me this is what's gonna happen. So yeah, week five, great improvement from week four. Like week four was like that was like an all time low. A very low point in life. Like I think it was more of like, bad market conditions, life circumstances, and just like overall my ability as a trader. And it has humbled me in a sense in where I'm at as a trader. So like, yes, I understand that currently I'm a break even trader. Currently I have to change something in my ability to trade to get to that next step. So what is that? And that's what I'm currently trying to find out. Yes, great improvement. Starting to follow my rules more, starting to go deeper into why I'm thinking these ways when I trade. And then like even what was a great step up from last week as well is when I didn't see a trade, I just didn't take one. Like we only traded 3 times this week, and that's also what preserved capital so well because on Monday my draws were taken out, didn't see where it wanted to go. Thursday, both my draws on liquidity was taken out. Even though I seen the trade on Thursday, I missed it, and both my draws on liquidity were taken out. I could have entered. So on Thursday, I could have entered off of FOMO. I could have been like, "Oh my gosh, chat! I see this playing out when it was right here." But guess what? My break even is already right here. There's a 5 minute unfilled gap right here. So if I were to hop in, put my stop loss all the way down here, risk to reward ratio will be negative. So I'm entering off of FOMO. I'm like, okay, yeah, it's gonna hit data highs, but how do I know that for sure? Yes, I see this play potentially hitting that, but the reason why I said break even at the 5 minute gap or the end of the accumulation zone is because the market may not want to go that high. The market may reverse its trend. So I could have entered here off of FOMO like, oh my gosh, I see this working out, but my risk to reward was bad. It was straight shit. So I'm like, okay, we're just gonna miss out on the trade for the day. And a big part of that is psychology and understanding that there will be another setup to come. Just like the next day, we had an A plus setup. So just understanding my mindset when it comes to trading, understanding what is pushing me to take the trades that I take. So, yeah, that was the week five recap for day trading. Stay tuned. Live. I think I think I'm gonna start switching the recaps to just trading recaps, not live trading anymore because I mean, obviously, if I'm losing, if I'm still new to trading, it's gonna be hard for newer viewers to watch entire hour length videos or long ass trading days. So I might just start doing 10-minute video recaps, showing y'all exactly why I took a trade. So yeah, that's the end of this week five trading journal recap. And yeah, hopefully y'all took something from this. Hopefully y'all understand what I was saying throughout most of this. And yeah, beautiful week. See you guys next week on the next recap, or see you guys when I do my weekly recaps. So yeah, peace out.